Well, let's discuss this stock and several others with Dipan Mehta, director at Elixir Equities, joining us on the show this morning. Dipan, great to have you on. You just heard the Dixon management there. The question with this stock is always whether, the price is too high, whether there's still more on the table. What do you say?
Well, I think the high P multiple is justified. Don't you think so, Survi? I think the company is doing very interesting things. They are trying to raise the profit margin, go into backward integration, higher value addition. I think that's all great, sweet news for investors like us and Dixon. And with 30-40% sustainable earnings growth, I think these multiples are justified. There could be some headwinds in terms of lower PLI revenues going forward, but I think the company's strategy is shaping up pretty well. So I think, as investors, we remain invested in Dixon, but fresh money you can put only when prices, I think, go down on a decline. That would be a good entry point, but not at these levels. 126 times is the P multiple. I was just checking while the interview was going on.
I was going to come to you, Dipan, and say, Dipan, this one is a little too expensive. But then you're saying that, they're doing the right things. They deserve that multiple. So Dipan's on board. Buy on dips is the call on Dixon Technologies. That's right, Dipan?
That's right. Buy on dips. I think that's true for a lot of stocks, Nigel, because the market...
What kind of dip, Dipan? Is a 5% dip a dip or is it a 10% dip?
10, 15, 20% dip. And I want to tell you this thing about, this company. We can talk 1 minute about this buying on dips and how valuations come down also. So there's a company called Sona BLW, which is a darling of the market because it is, into EV components. And I've been tracking that company for 5 years, and the trailing P multiple was always 60, 70 times or so. But last I checked, it has come to 46 times because prices have declined and earnings have gone up. So you get that sweet moment where even high growth, good quality companies, which you always wanted to buy at very high P multiples, suddenly there's a period when earnings have gone up, prices have come down, and they are available at a reasonable valuation. So something similar could happen in Dixon and some of the highly valued stocks as well.
No, absolutely. I mean, you get chances. You got to be ready with your work and background, etc. And of course, you have to have cash as well. So Sona BLW, obviously you like that name, right? I mean, 450, 455 or so right now. Dipan, morning. Angel One reported numbers. Poor set in that sense. And there's also some talk of maybe some fundraise, etc. Perhaps ahead. Any thoughts on this one?
See, I think it's a very strong company and very aggressive management. They understand the limitations as well. But they need to transition away from this derivatives trading to become a wholesome fintech company, which is focusing on multi-products, not just equity and derivatives, but also loan products and similar wealth management related products as well. And they're clearly following that direction because they do realize that there's a lot of volatility in their earnings because of the broking business. But there's still some distance away from there, but yet the stock price is cheap. So I would put them on my radar. And if there are further corrections, and then that the strategy of diversifying away from equity and derivatives, if that is working out fine and greater proportion of revenues are stable and annuity type in nature, then it may be a good, interesting investment proposition. But it's not a company you can take lightly. It's a very aggressive management, and they're going to grow the business steadily over the next several years or so. And this entire financialization of savings is a very strong multi-decade, I would say, investment trend. So all companies over there certainly merit, a look in once in a while or so.
Okay. That's Angel One and the capital market space. Staying with BFSI, Dipan, State Bank of India. Now the stock, actually not just SBI, most large banking stocks have really been testing people's patience, right? Let's pull up a one-year chart on SBI. It really hasn't gone anywhere. It was 830 rupees on the 3rd of May, 24, and it's 830 today. Big QIP happening, big fundraising exercise. How would you think about SBI now, Dipan?
And I'm surprised to say that at this point of time, the PSU banks are giving the private sector banks a run for their money. When I entered the market, it was all about private sector banks. Last 20 years, it's all about the wealth creation by HDFC, Axis, ICICI, so on and so forth. But now when I look at a Bank of Maharashtra's earnings release, if you remove the Bank of Maharashtra and the PSU tag, you'll kind of think it's actually a very well-run, highly aggressive, profitable private sector bank. And investors are realizing this thing, and they're moving money away from the private sector banks into the PSU banks, where the valuations are reasonable, and a lot of their strengths are coming out in terms of CASA ratio, Now the NPA problems also have been solved. They have a strong brand, great distribution network, technology platform also has been upgraded. So I think we'll see more and more money shifting away from the erstwhile private sector darling stocks into the PSUs led by SBI. And this particular QIP, I think, is very important from the company's balance sheet point of view. And now I think their growth rates may be higher than the industry level, could be higher than a lot of other private sector banks as well. So certainly it's a stock to watch. It's a nice large cap company and it's got risk return profile, I think is fantastic. Like it's nice, safe investment with reasonable returns over a period of time.
Okay, so nice, safe investments. That's two hits that Dipan has given us, both on Dixon, buy on dips, and he likes SBI as well.
Just a quick word on a bunch of specific names, single stocks. Prime Focus, Dipan. I mean, it's not a new name for those who've been around for a long time. It's kind of sort of not made money for investors for a long time. They did a placement recently at about 120, 130 odd levels. It's run up 170, 175 now. There is this movie, Ramayan, which I think is coming out. I don't know if you've seen. It's being produced by the company. Any thoughts on this one?
See, I think you're right. It's a very old company and it has gone through a lot of ups and downs, ownership changes, and they have acquired a very solid asset in US, which is doing a lot of film processing and digital work for a lot of Hollywood names as well. But somehow, when you look at the track record of the numbers, there's no consistency. And you would expect that with so much of technology and visualization and digital application, companies like Prime Focus would have a great future. But at the end of the day, I think it's not been a great value creator. It's been around for a long, long time. So certainly, I think you should keep such a company on a watch list and see if something interesting is happening over there. Because the space that they are in, certainly that is doing very well because of OTT content and because of more and more technology in production of movies and of TV serials. So it's in a good sweet spot, but I'm not sure whether the numbers have come through. It's a company I feel which has not lived up to its full potential. And I would add one more company. There's another company called Brightcom, which is also a very interesting story. And that's also on our watch list. And similar business, and again, they've got a lot of overseas acquisitions and overseas kind of service providing. And that's another company that you could look at, which is a similar space.
Right. Dipan, Brightcom is formerly Lycos, right? I mean, this is the company with all those issues.
There's another company, you can do a search on Brightcom again. You got the wrong stock over there. It's, I think, Brightcom Group, if I'm not mistaken.
Yeah. Sorry, that's what I was wondering. Why would Dipan talk about that Brightcom? I mean, no, where is this one at?
I'm also not sure. I just when I was looking at Prime Focus and this particular area, that's where I found this company. I could be wrong about the name, but there's another company which is engaged in a similar.
Okay. Just FYI, Dipan is. I mean, we'll get to what he is talking about, and Dipan will check and let us know, and we will let you know, and we'll ask him. But he's not talking about the company formerly known as Lycos, where there was a lot of fraud, and I mean that's not the company he's talking about. Just wanted to make that clear.
Right. Outdoor media, is that the one? All right.
We'll wait by on that one. Dipan, the other one is I wanted to get your thoughts. Is Religare, right? Again, it's come up. The Burmans have come in. But the latest move, they've put in just under 5% to avoid that open offer. It's in the form of warrants. So kind of, it's like you got to put in money, but not all up front. There are other investors also who've come in. I mean, early investors like Ashish Dhawan, etc., put in additional money. But how would you look at this one?
Yeah, I think, Prashant, they have a lot of catch up to do. And now it's no longer, a simple business, compliance, competition, emergence of so many new fintech players. I think the going may be a bit tough for Religare, and they need to rebuild the team also, I think. It's a multi-product financial services house, no doubt about it, and a great buy from Burman's point of view because it opens up a new avenue for deploying their surplus cash for their family office, and eventually it will do well. But considering the valuations and considering the choices which are available to you, I would say that I would give Religare a pass. And within this entire financialization of savings investment theme, our preference is for the asset managers or consider wealth managers as well, I think they have the best steady cash flows and yet available at reasonable valuation. So I would prefer those companies than companies like Religare. And then there are the NBFCs also, which are, doing pretty well, like say Bajaj Finance getting more and more into financial services. And those growth prospects also are pretty decent. So I just feel that it's a company which needs a lot of heavy lifting to do. And at the same time, it's a very competitive industry. So I'm a bit skeptical at this point of time, but I mean, certainly you could look at it in future once they have sorted out the strategy.
Okay, all right. Since you're talking about Relicare, the Burmans, what about Eveready? I remember when they made their open offer, everyone was saying this is the big turnaround. A few years later, the stock is up only 10% in comparison, I think, to the open offer price. And in comparison to the price at that time, it's virtually not moved. But I think in the last 10 days, the stock has done a quick 320 to 390, I think so. And I think now it's at around 370. Any view on Eveready?
Sorry, go on.
No, there's no view on Eveready. It's just dropped off our entire list. I mean, we don't get into battery, like, the traditional battery business. I'd rather look at companies getting into lithium-ion battery and closely watching what Amar Raja and Exide are doing. And if they can make a success over there, then I think the future of those companies are pretty much assured, I would say.
No, absolutely. Got that. Anything else? Any single other ideas, Dipan, that look interesting? Lots of listings, right? I mean, you track secondary, and then there's so much happening on the primary side as well. And one view has been that, well, let things settle, and eventually you will get better prices with some of these newer listings, but they're all maxed out and juiced out by the time they hit the market. So pricing is a problem. But anything looks worth keeping on one's watch list, as you said. You began by saying buy on dips.
Yeah. No, I think we spoke about Sona BLW, and that certainly looks quite interesting. And I think the typical companies, the large cap companies, I think are doing pretty much fine. We spoke about Bajaj Finance, our old favorite is there, which is Eicher Motors, L&T. I think investors, as we are analyzing portfolios, are kind of underweight large cap. And they need to correct that because, if the market remains sideways like this, eventually what will happen is get very narrow also, and fewer names will do well. So we need to have a good balance in the portfolio. That's what I feel. And at the same time, I think, this earnings season also is very important, and it may turn out to be a bit of a disappointment, but still one needs to track how the earnings growth are taking place for the markets to move up higher, because there's only so much that expansion of P multiples will take us. So right now, I think broadly in a wait and watch mode.
Absolutely. And those earnings need to turn. They need to turn fast. I mean, if India is to justify its valuations at roughly 21, 22 times. Take that point. Dipan, you have a great day, and we look forward to connecting again soon.